everyone. Welcome to the April 2026 housing market update brought to you by the Reby Homes team. Let's start with interest rates because that's driving almost everything. Rates have been volatile, moving up and down week to week, and that's not random. It's being driven by global uncertainty, things like geopolitical tensions and energy prices, which can push inflation expectations higher and cause rates to swing. But here's the part most people are missing. Even with the volatility, rates are actually lower than they were a year ago, and that matters. For example, on a $500,000 loan, we're seeing monthly savings of $250 to $400 compared to last year, depending on the rate. So affordability, while still a challenge, is quietly improving. Speaking of affordability, wages are actually growing faster than home prices right now. And that's a big shift. For the past few years, home prices were outpacing income, making things harder. But now we're seeing the opposite. So even though buyers feel like it's tough, because emotionally it is, the math is slowly starting to move back in their favor. Now let's talk about supply. We're seeing more sellers come back into the market just in time for spring. New listings have jumped over 21% month over month, which is actually higher than the typical seasonal bump. But inventory isn't just growing because of new listings, it's growing because homes are taking longer to sell. So supply is building from both sides. More sellers entering the market and homes sitting longer. That's why buyers are starting to feel like they have more options. An interesting trend that we're starting to see more of is delisted and relisted homes. We saw a record number of canceled listings in 2025 and now a surge in relistings in early 2026. This is due to sellers who didn't get their price before now coming back on the market with a different mindset, and that's great for buyers. At the same time, buyer activity is increasing. Pending sales are trending up, and economists are starting to say that we may be seeing early signs that the market is turning a corner. And that aligns with what we're seeing across the board. Buyers are still cautious, but they're not gone. They're just more selective. Now let's address the question everybody's asking. What's happening with home prices? Prices are not crashing, but growth has clearly plateaued. Some markets, especially areas with a lot of new construction, are seeing slight declines due to increased supply. But nationally, we're seeing flat to slightly negative year-over-year growth, more homes selling at asking price with some seller paid closing costs or below asking price, and overpriced homes are sitting longer. This is very much a pricing is everything market. Let's zoom out for a second though and look at how economic forces are contributing to market conditions. The economy is not in a downturn, but it's not booming either. Consumer spending is stabilizing, not surging, and mortgage rates are reacting to all of this in real time. So what you're seeing is a market that's trying to find its footing in a more normal economic environment. Bottom line, affordability is slowly improving, even if it doesn't feel like it yet. Inventory is rising, giving buyers more options. Sellers are re-entering the market, but with more realistic expectations, and pricing power has shifted from aggressive to strategic. This is not a boom market, and it's not a crash market. It's a transition market where strategy matters most. And now let's take a look at our local market here in the Phoenix metro area, and this is for Maricopa and Pinal County. Let's start with prices. If we look at the median sales price, we're sitting right around $460,000. Take a look at the pattern though, pretty stable over the last 3 years with some minor fluctuations, but ultimately stable. We've been in this sideways movement for well over a year now. Prices go up, come back down, and hover in a pretty tight range. And the same goes for price per square foot, which is hovering right around the low 300s. Now let's look at days on market. We're sitting at about 78 days on average. That's a big shift from the 2-week market people still have in their heads, but it's actually closer to a normal market. Homes are taking longer because buyers have more options and they're being more careful, largely because rates are still sitting around 6.5% to 7%. As for inventory, we're sitting at just over 21,000 active listings. And that's a meaningful increase from where we were, and it explains a lot about what's happening. More homes means more competition, and more competition means more pressure on sellers. And that leads directly into what might be the most important graph this month, which is seller concessions. Over 50% of all closings now include seller paid concessions. Let that sink in. And the median concession is around $10,000. This isn't a small shift, it's a structural change in how deals are getting done. Instead of lowering prices, sellers are buying down interest rates, covering closing costs, and structuring deals to make payments more manageable. This is how affordability is being solved right now. And a quick note on the rental market. Median lease prices are around $2,070, and we've seen a slight dip from the peak. The rental market has softened a little bit, which gives tenants more options and takes some urgency away from buyers who might have otherwise jumped in. If you're reading the news, you're probably seeing some mixed messaging, and that's because the market is mixed. Oftentimes, headlines can be misleading because they use data from 3 to 6 months prior, but there are some headlines and articles in line with the current market conditions. Some recent themes being buyers are regaining leverage after years of seller dominance. That's true. Affordability is still the biggest challenge due to interest rates. Also true. And inventory rising across markets like Phoenix. Also true. And all of that lines up exactly with what we're seeing in the data. What this means is this is a balanced to buyer leaning market. Buyers have more opportunity than they've had in years, but they still need to be strategic. Sellers can absolutely still win, but only if they're priced and positioned correctly. And most importantly, the market's not emotional. It responds to supply, demand, and affordability. So if you're thinking about buying or selling, this is where strategy matters more than ever. And of course, we're always happy to walk you through your specific situation and show you exactly how this market impacts you. Thanks so much for tuning in, and we'll see you next month.